A very good morning and welcome again to Tip TV CEO interviews. My name is Malcolm Graham-Wood and I'm delighted to meet again Keith Bush, who is the CEO of Northern Petroleum. Welcome back, Keith.
Thanks for having me again, Malcolm.
Nice to see you again. I always ask CEOs when the first question comes up to give a bit of background on the company and so on. And it's most important with you guys because you've changed your colours and spots quite a lot in the last 2 or 3 years. So why don't you give us a bit of a background to what's been going on and how much the company's changed?
Yeah, it's been an interesting time in the oil industry over the last few years, and with the worst downturn the industry's seen for a long time. We've gone through big changes in terms of the company. The company previously had 10 board members. We went down to 4. We've got a new one on board now, and that's a story in itself. And it's really now almost feels like a fresh start, like a new start, but with actually some excellent assets that we want to take forward over the next 5 years, and that's where we're looking forward to. We have some excellent quality non-executives on our board, and they keep us as executives very straight. So it's an exciting time for us at the moment. We're looking to grow from small beginnings into a much bigger company and add the value that the shareholders deserve.
Good. So the new strategy at Northern Petroleum is, according to your presentation, low risk, low cost production, and doing that through the portfolio that you've built up at the moment. Why don't you start off by telling us about Canada and how you developed that from the original asset purchases you made?
Yeah, and we first went into Canada back in 2013, and it was an entry that was low cost at that point, but we're talking $100 oil, so it was a very different situation to now. We went up into northwest Alberta in an area that had a significant amount of unrecovered oil, volumes in place of the land that we acquired of over 100 million barrels. We subsequently changed our approach because we felt that we needed some production facilities. At that point, we only had a few wells, we drilled a few wells, but we needed to get some production facilities on board. So we spent 2015 trying to work out how we could do this at the sort of low cost that we needed to achieve. And fortunately, there were a number of companies that were looking to exit the area because it was non-material to them, low production rates. We had a look at a particular company and the assets they had up there and managed to come up with a deal with them. It only cost us $200,000. We picked up over 100 wells, picked up 2 production facilities, which were 15 miles away from our existing wells. Great synergies in that respect. And it gave us the opportunity to produce into the existing system. And with that, there was 150 barrels a day of production that came with it, very small, as we know, but the opportunity was there to do low-cost intervention work and workover work that would increase the production from there. Very easy to double it quickly, and then look at the incremental pieces we could do. 2016 was a process of doing those first small pieces of work, and then we looked at how we were going to fund the business going forward to do the future work program this year and going beyond.
Good. So you've got a substantial land position now. Was it 58,000 acres?
58,000 acres, that's right.
And in northwest Alberta, which historically low recovery rates, and you're producing light conventional oil from these carbonate reefs, is that right?
Yeah, that's right. And it's the type of thing that when everything got really excited in North America about the unconventional, the shale production, the big operators just looked away from the conventional oil. And if you look at our land base now with the acquisition, we're over 180 million barrels of oil originally in place. There's only a 20% recovery factor on that oil to date. So it leaves a huge amount of oil still to be recovered. We only need to up the recovery factor by 5% to get 10 million barrels of oil out. So it's a very attractive opportunity, and this is very low risk, because everything's been drilled before.
And of course, you are building infrastructure there and capacity, so this is perfectly achievable. And of course, presumably, as you increase production, those costs, which must be pretty much fixed now, give you a significant reduction in the cost of your OPEX.
That's absolutely correct. And the fact is, we have a fixed cost base from the 2 production facilities that effectively gets covered by about 250 barrels a day of production. Anything beyond that, and your cost per barrel reduces dramatically. So the netback you get from each barrel increases significantly, and it means that our revenue generation, our free cash flow that comes out of it, enables us to invest further in the assets and other projects as well.
Yeah.
You know, and we're at low levels of production at the moment, but we're not looking to grow to 1,000, 1,500 barrels a day. We're looking to 3,000, 5,000, 15,000 barrels a day. It's that type of approach.
Yeah, and it's well worth looking in your presentation, if you can get hold of a copy. You have a great chart on that which shows how the netbacks increase. So presumably at some stage that'll be on the website, but that's great news. In this area you have a sort of combination of well workovers, some recompletions, some sidetracks, and some new wells. So you've got a bit of everything. How does that all work and split out? How do you prioritise?
That fits together. I mean, we want to do the easy to achieve pieces of work first. So the rod replacements, the workovers, and the interventions. They're the things that we've looked to do first, and we've done a program of that just recently. But then it goes on to the dual completions of our original wells up in the further north, slightly further north than where we are now, and then the sidetracks. So it's a case of taking the low-hanging fruit first, and then generally working up the chain until you get to drilling wells again, which is, it's something that we will definitely need to do in the future because the potential for recovery there is so high. But that's something that we're looking forward to a bit later on, 2018, that sort of time frame.
Right. Now, you mentioned a few minutes ago production and so on. On the website or on the presentation, you say that production the end of first half of this year will be 500 to 700 barrels a day.
Yep. So
just if you could detail again what your plans are for the year or two coming up. You talked about 3,000 and more.
So, and that's a really good question, and it's how we get to those next levels. So at the moment, we've did a winter work program where we worked over 23 wells. We've increased our production to 500 to 700 barrels a day. We've got very similar type of work program that we can do, but going towards more of the sidetrack, more of the dual completions. We'll do that over the summer, and the aim is to add another 300 barrels a day. So we're looking at 800 to 1,000 barrels a day by the end of that. Mm-hmm. And then we get into the more serious side of things, sidetracking existing wells in the further north area and drilling new wells to test the hypothesis that we're working on this summer. That's where you get to the real production growth. So we should be looking at a winter work program at the end of this year that will take us to 1,500 barrels a day by this time next year, and then the step up goes from there. And it's about how much capital you can put into it, because wells can be drilled very cheaply. We're talking 1.5 to 2 million Canadian dollars.
Well, it sounds very interesting. I mean, doubling, and more production in due course is, and the way we talked about fixed costs and so on is very profitable for the business. There is a sort of seasonality or seasonality factor to your work in Canada, because I read about the fact that you have to sort of close down for 2 or 3 months when the chill thaws out and that sort of stuff. How long do you sort of shut down for, and how do you plan for it, and when do you get back into business in Canada? Well,
and it's not all the production that we shut down, it's some of it. But actually, I've just come back from there, and it gets incredibly muddy and wet at this time of year. And you go out into the field, and everything is just swamp-like. But we do have infrastructure built there, and we have a lot of pipelines. So a lot of the wells are actually pipelined into the existing facilities, and we have a direct offtake route into the national network. So for those wells, we keep on producing, and we're still going at the moment. We're doing about 300 barrels a day at the moment. But when we can switch on the wells that are trucked and the wells that are slightly more remote, that's when we get to the 500 to 700 barrels a day. We kind of plan for a 2-month period between the end of March and the end of May.
So at that moment, a little less than half can go up by pipeline all the time.
Yeah.
And the rest you have a couple of months break for.
Hiatus, yeah.
And then after that, when you're back in business again, because it's dry and then it gets cold. So
yeah, and it gets cold, and it gets a little bit wet in October time, but actually it's normally pretty okay there. It's just this spring break-up period, as the Canadians call it.
Yeah. Now, 1 or 2 other things on Canada before we move to other parts of the world. Where's the sort of the prognosis for the rest of it? I'll come back to your partner in a minute. But,
so we're looking at this summer. We're working on a subsurface work program that is looking at the other layers that were within the reservoir units that we have. So we have multiple stack pay units that are all penetrated by the existing wells, And the 180 million barrels in place that we've talked about is only talking about the Keg River Reservoir. So we have about 3 other layers on top of that. They have been looked at and drilled into by a company slightly further north called Strategic Oil and Gas, minor Canadian player.
Yep.
They've had great success on that recently, and we have exactly the same formations over our own assets.
Yeah.
So we're now looking at mapping those out, and that's where the potential big value add can come from these assets. And our new partners you alluded to see that as a very important part of the business.
Good. We'll come back to the partners in a minute because I'm just moving around the world now. So obviously then the other major part of your portfolio is in Italy.
Yep.
And you've got onshore and offshore.
Yep.
And you've got partners in particular with Shell there. Why don't you just give us an overview of what's happening in Italy in the various parts of the business there?
I mean, Italy is a very different place to work than Canada, as you know, but the assets base that we have there is absolutely second to none. It's world class, and in Shell we've got a world class operator developing our onshore for us. So the onshore prospect Cascina Alberto is something that was identified back in the late 90s by Enterprise, but never got drilled. Shell took it over when they took over Enterprise. They had all the data, and they came to us and they wanted to farm into our license. So
when Shell come knocking, you don't say no.
you don't turn them down, and it's really good to be working with them. And you see what they put into it. They're going through a consultation process at the moment in the Cascina Alberto area, where they've had something like 150 meetings with various local people, local representatives of the municipalities, to try and make sure that they understand what they're trying to do. There's the next plan is to acquire 3D seismic, or 2D seismic, I should say, back in back end of 2018-19, and then beyond that, looking for drilling and exploration well. And as part of the deal, we're carried for a large proportion of the cost of all of those. So it's
so
really
typically Italian, slow, steady, but with Shell at least you've got someone who's capable of using things.
Absolutely.
You also have these what you call strategic offshore position in the south, and
so it's
two
Southern Adriatic. We have 2 permits there, but we've also got 5 applications which we expect to be awarded soon, and that will give us the largest exploration area in the Southern Adriatic. Our next step on that is to acquire 3D over the main prospects, and we've got 2 or 3 discoveries on there, Giovia, Medusa and Ravesti, but we've also got a huge exploration prospect, world-class exploration prospect, which in the high case can be over 1 billion barrels recoverable. So it's something that we very much want to push forward. We need to get the 3D seismic, and we're looking to start that tender process over the next couple of months.
So you've had the environmental approval for the 3D seismic. Yeah. You're now going to go ahead and do that. What would you do that next year?
It's likely to be in the first quarter of next year, because we either acquire in the last quarter of the year or the first quarter of the year in that area of the Adriatic, and so that's when we're looking for now.
And that covers both the prospects in the area.
Yeah.
And so probably a couple of years after that for wells. For wells.
Yeah.
Anything else to add on Italy before we go then? That's sort of covered.
The company's had Italian assets for a long time, but actually now we're starting to see progress with them. We're seeing operations happening elsewhere in Italy. Like Sound are making progress on their Padile well. So it takes time. I know you've seen a lot of it before, but it is going to happen.
Yeah, I mean, in itself, it's not a problem if it runs alongside other things, and you made it perfectly clear that Canada is providing production plus some upside from the various types of drilling. So, as long as you've got a good team working in Italy, and you're with Shell in the onshore stuff. So, the next major question that I always have is about funding, financing, and partners. So if we could start with the cash situation and how long you've burned through it and so on, and how it's looking on the cash front.
Yeah, so I think at the end of March we were about $7 million in the bank. We have a pretty low cash burn now. I think when I first joined, the G&A was around $12 million. We're at less than $3 million now, and it's something that we're very focused on. So we want to be thought of as a low cost operator, not low performing, but low cost. We retained all the skills that we need. Yeah. We're very focused on keeping the costs down, particularly in the London office, and putting it towards the where we need it in Italy and in Canada.
And you're very disciplined because you've moved south of the river. You've got an office in the Oval. Yeah. There's a cricket match there today, but you're here with me being
absolutely.
So on that's funding happening. I wouldn't mind having a quick chat about this very important strategic partner,
Yeah.
H2P, because they've bought, according to the presentation that I've looked at, they're invested in most of your assets.
Yeah, that's right.
And you've said in there that if you bought more, they might well participate, and they might put some cash into the business as well.
Absolutely.
Tell us about them. They sound important to
I
you.
mean, they came in at the end of last year, and we were looking around for funding for the Canadian assets and also the Italian portfolio. And they're very technically driven, so these are industry people. They saw our assets, and they thought, actually, there's a lot that we can do with these. We want to be involved with the company, both at the corporate level and at the asset level. They are backed by a company called IPOL. So it's High Power Petroleum is our partner and our shareholder. They're backed by a company called IPOL, which is a privately owned company, got over $1 billion worth of value, has some very high net worth individuals involved in it, but also funds like the ConocoPhillips and the Ontario Teachers Fund. So very well established company. And they are looking at building an E&P portfolio. They've taken on 3 companies at the moment, but we're the only public company, and they're looking for a couple more. They actually wanted to invest more in the company, but at the stage we were at, we couldn't really do that.
So you can effectively get them to do that by making acquisitions. And you've got a Calgary team. I know that you're quite pleased with the fact that you've put together a Calgary team out there, haven't you?
Yeah, and it's taken time to get them together, but we have a very good team out there now. And actually, Paul Lafferty, who's our COO, has gone out from here, has gone to live in Calgary for a couple of years, and he's going to pull that team together and very much focus on the Canadian assets, get the operations there to where we want them, reducing the operating costs as much as we can, and bringing up the production in the way that we see fit. So it is really exciting, Calgary, at the moment.
Good. Well, we're nearly through. I've got one more question about, which is probably a short answer, because on your website you say you've got French Guyana, which is sort of the door is ajar.
Yeah.
And you've also got Australian acreage. So maybe you could just sort of quickly comment on those two.
Yeah.
Which are still live on your website, but backburnered, I guess.
Nothing more is going to happen on French Guiana. The government are not going to go through with an extension process on that. So at this point, we're basically closing that out at the moment. Yeah. Australia, who knows? It's an unconventional play, but it has conventional interest. So we'll see. We're not spending any money on it at the moment. Yeah. And we'll see what happens over the next couple of years.
Brilliant. Well, you've given us a good insight into the company. I've learned that you've got a mixture of production which generates the cash, and you mature these sort of potential high return E&P projects and appraisal to give your shareholders a chance of what you call significant growth potential. In the last question, maybe I could ask you to finish off by telling us what the vision is. You've mentioned a few things already, but perhaps you could give us an idea of your vision for Northern for the next couple of years and see where we think we might be by then. Okay,
I think for the next couple of years we want to get to 2,000, 3,000 barrels a day production. Then beyond that, we want to shoot the seismic on Southern Adriatic and start drilling wells there. And monitor Shell's progress, because they'll make progress in drilling a well on Cascina Alberto. So it's really exciting at the moment. The production growth is primary, but the exploration in Italy is really company changing.
That's fantastic news. It's been a pleasure to interview on TIP TV Keith Bush, CEO of Northern Petroleum. Thank you very much for watching, and look forward to seeing you next time. Thank you.
Thanks, Malky.
Thank you.